Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, checking in on the broader market, and as most people out there will say, we have never seen anything like this ever. This is the most FOMO I've ever seen. I specialize in the last 10 years of trading. I specialize in hype and FOMO sectors, whether it's US marijuana, Canadian marijuana, whether it is cryptocurrency space. I'm very accustomed to this kind of environment. I have never seen it for the market as a whole to this degree. And I've never seen this much dollar volume involved. You're talking a sector, you're talking hundreds of millions of dollars, maybe a couple billion over a week. But in this current condition, we are talking insane amounts of dollar volume. So looking at SPY, we know that the bulls are in complete control. That's the bottom line. So let's just get that out of the way. We certainly know that at this point. The S&P 500 futures chart 12-hour RSI is currently, if you look back at the last 2 years, it has only been this high a couple of times. We're right now pretty much at the highest it's ever been in the last 2 years. And the other times that it has happened have been in all-time high scenarios. We are extremely overextended. That does not mean short. That just means be ready, scout a potential setup for a short, protect your profits in bullish plays, and watch for the potential of a short-term top. This kind of move in general, I look for a blow-off top. And what that means is a last massive push up and then an instant significant drop. And that happens because you clear out the order books. Again, I've never seen this on a broader market scope. So when you're seeing it on an individual ticker, you shoot up, you take out all the asks with a huge amount of dollar volume. The last bull to buy has bought. The last short to cover has covered, and then you dump. And you dump because there's no bid support walking on the way up. Whether that's going to be the case on the broader market, I am not sure. All I know is that in my experience, I would be looking for a blow-off top. That doesn't necessarily mean we're going to dump 10% once the top is hit. Even if we're just looking for a daily pullback, we could pull back 5% in the S&P 500 over the course of 2 or 3 days, and we would still be in a daily uptrend. So bulls have tons of space to work with and tons of cushion, but what we do know is this is the time to be extremely cautious. And unfortunately, this market environment, as with every hype cycle that I've played, is going to result in bag holders. Now, whether those bag holders only last a couple weeks, whether they last months or years, we have no idea. But I can show you emails that I have of heartbreaking messages from people that buy at the top or do not sell and lock in their profits, and they certainly regret it. So again, bottom line, we're just going to be looking for a daily higher low to form, step number 1. Today I was watching first thing, and we had the constant sector cycling going on. We had XLF pulling, or we had QQQ pulling back to the low of the day. At that point in time, XLV was holding steady and XLF was holding strong. Then QQQ started its oversold bounce and XLF started pulling back and XLV hit the high of the day. As long as those 3 sectors are not hitting the lows at the same time, the bears are not going to get followed through in the S&P 500. That's your guide for, is this the top? And if that's not happening, if we're only seeing one sector at a time hit a low of the day, the answer is no. You will know it's the top when you look down and you see XLV, XLF, and QQQ all hitting the low of the day all at the same time. When that happens, the first time I see that, I'm going to say, that's our temporary top. Let's see if the bulls can form a daily higher low and keep the daily uptrend intact. As far as resistance levels from here, certainly very limited. We're looking at all-time highs. That is the next resistance level. SPY 339.08. It's still a ways away. We're still looking 5% from here, but it is a massive amount of FOMO. So not only are we seeing it in the broader market, right now I'm looking at airlines up 1.5% after hours after a 9% day. I'm looking at NKLA. I mean, you can look at individual names. Look at NKLA. Look at CHK. These names are seeing insane moves, and this is the biggest amount of FOMO I have ever seen in my life. We've seen it in the MJ sector. Here's the MJ sector today, playing laggard bull move. Cron with a 22% day. It's just money growing on trees for the bulls, and whenever we see that, we know it's not going to last. Protect your profits. Be walking up stop levels. Have game plans. And don't be buying into overextended moves or you will lose money. Congrats to the bulls. Wow. Never a dull day these days. So IWM, high of the entire move. We're going to be looking for IWM and XLF to give us some more significant profit taking in the near term, but there's no sign of it yet. Right now I'm watching on XLF, or both of these names, a higher low every single day, 6 days in a row. When that pattern breaks, our temporary top is hit, and we look for a daily higher low. Tons of space. Again, we can have a blow off top and a fast pullback. IWM can pull back 10% and still be in a daily uptrend. So tons of space. Hourly higher lows established today. Hourly 12-period exponential support for a lot of names. Looking at SPY, hourly time frame. Exponential 12-period support holding. Looking at the S&P 500 futures chart, 4-hour, 12-period exponential support has been holding for a week. And that's what I'm watching overnight. If that level is support overnight, bulls are keeping complete control. QQQ all-time highs. Anything above 230, 368 is just a daily high or low. Resistance, we're just looking at psychological levels. XLV, unable to break the high of yesterday, but that's the only short-term resistance. And then its all-time high is 1% away at 105.08. Anything above 192 cents is a daily high or low. XLF, bulls in complete control. We're watching the pattern of a higher low every day. Did not break the high of Friday, but bears are going to have to break 26.37 for that to mean anything. XBI, daily higher low is set at $101.24. Short-term resistance 106.11, and then all-time high 108.05. And SMH, potential daily bull flag. Gap filled back to the downside. Anything above 135.65 is a daily high or low. So in this environment, it depends if you're aggressive or patient. If you are patient, you are not making any bullish entries at this point in time. If you are aggressive, you are definitely still trading bullish in this market environment. I have been having a bit of an edge towards being an aggressive bear. Now, all that means is I am positioning myself in bearish entries and then stopping out when I'm wrong and saying, nope, today's not the day. And then I look for trades. So just as an example of that, I look for bullish trades. As an example of that, Jets. I was looking for an hourly lower high on Jets today. It looked like it was set pre-market. I entered bearish right when the bell rang. We pulled back in the morning. That allowed me to take half of my profit. So I entered bearish at 21.23, let's say. I exited half of that after a 10-cent gain, and it might be a little bit different. I entered at 21.13, exited half after a 10-cent gain, and my break even is then 21.26. So from there, I just let the morning play out. I watched this 15-minute equilibrium, and I moved my stop to 21.32. So I stopped out, tiny loss. Perfectly fine with that. And as soon as I watched the morning routine and saying, okay, our sectors are doing exactly what they need to do to keep the broader market strong, I then said, all right, I'm looking for bullish entries at this point. And I was trading NKLA bullish, I was trading Tesla bullish, and was able to offset a tiny loss with some solid day trade wins. So I will day trade bullish in this environment if the sectors in the first half hour of trading show me what I need to see. But every day I'm scouting for potential bearish entries because we know any day from here will be the temporary top and we should see a decent little pullback. So that is the way that I am currently approaching this market, and we get a ton of information in the first half hour of trading every day by watching our three most important sectors. The VIX is bouncing on the daily, and people look at this and say, does this mean, is this a little bit of a tell? Are we about to see the pullback now because the VIX is bouncing when the market is so strong? This can easily just be traders looking to hedge in the current market environment. So when we see the leveraged ETFs, UVXY, with a green day today and a green market day, Could it be a canary in a coal mine? To a certain degree, this is telling me that traders of the volatility sector know that we are due for a daily pullback in the broader market any day now. That being said, this is still a very weak bounce, and we're just looking for a daily lower high. On the VIX, anything under 3060 will be a lower high. And again, if I have a portfolio right now that's up an insane amount in the last 2 months, hedging with some volatility index is not a bad idea at all, especially if I want to keep those positions long term. Gold, daily inside bar today. If the inside bar breaks bullish tomorrow, anything under 1745 is a lower high. But all the bulls want to see is just keep this weekly consolidation healthy. At this point, it is still healthy. And we'll be watching for a daily trend change to indicate the weekly higher low has been set. The dollar tried to get a bounce going. It's extremely weak. It's a potential daily bear flag right now. And this, in my opinion, we'll have to see. I'm very curious to see if the market topping temporarily, even just for a daily couple day pullback, if that's going to coincide with the dollar bouncing as funds are leaving the market and going back into cash positions. That's something I'm watching for. And 94.65 is the most important support. So it is a potential daily bear flag. Let's see if the low of 96.44 can hold. Bulls would have to break 97.07 to keep this daily bounce going. And even then, we're just looking for a daily lower high. The fact that gold and silver have been consolidating a bit with the dollar so weak, we have to pay attention to that, because we know if the dollar does get any kind of meaningful bounce follow through, that's only going to add some downward pressure on these metals. So I'm watching the daily downtrend. I made one bullish re-entry attempt after exiting a swing bullish position in profit. I was stopped out with a small loss, and now I'm being very patient. Silver daily uptrend is still intact, higher low, trying to be established. What the bulls have to watch out for is a head and shoulders here, with our left shoulder, head, and if we get a bounce and cannot break 1839, have to be cautious of then rolling over and breaking 1722, which would be a head and shoulders pattern. Right now, it's not the most likely scenario because the bulls are just fine, bigger picture. But if we start to see weakness when we get up towards around 18 or so and start to lose hourly and 4-hour uptrends, that's something to be watching for, which would mean just zoom out and look for weekly consolidation to take place, which is certainly due. Silver hasn't consolidated on the weekly time frame in 6 weeks. Miners, a little bit of a bounce. We're watching the high of Thursday as resistance and then the high of last week. Again, we're looking for a higher low to be established on these bull miners, but we have to keep in mind the market has not consolidated at all, and market consolidation would add some downward pressure on these bull miners, and we need a daily trend change clearly back to the bulls for us to say that our weekly higher low has been set. So all the bulls are attempting to do on this bounce is create as much space as possible for the daily trend change to look to take place. Oil, topping out. So oil is topping out on a bullish headline. Why? Because we were overextended for the bulls, and that headline suckers in the last of the bulls, and it boots out the last of the bears. So we pushed up to $40 psychological. We've got the news over the weekend that OPEC is expanding or extending its production cut for another month. And a lot of people who don't understand market psychology are going to look at that and say, why are we red on that bullish news? And it's the same reason that the airliners bottomed when Buffett sold, and then the last of the retail got suckered into selling their positions. That marked the bottom. They were already extremely weak, and that's a sell the news. That's a buy the news headline for airliners, and this is a sell the news headline for oil, because again, we're just extremely extended. The last daily consolidation that we saw was 26% ago. So we are just looking for a daily higher low, but the top is marked by that news headline. And I have a video on our YouTube channel, what does sell the news mean? And I suggest you check that out. It's probably under the playlist Trading Lessons. What does priced in mean? And that is a perfect example. So natural gas. Keep an eye on natural gas. We're continuing to battle this weekly 12-period exponential resistance. We're still extremely tight. And I'm very curious to see if these bulls can shift this momentum. The first thing we need to see is a break of 172.2 and 176.9. Break those two levels, and we're going to start paying attention to these bulls on the weekly time frame after volatility has shrunk significantly in this sideways trading, leveling out, building a base of support. Let's see if the bulls can follow through with any momentum from here. That is where we stand in this market. Please be protective of your profits. Don't blindly short this market because it's overextended. Yes, it is overextended. I feel like this market, for the last however many years that I've been doing this, I've been talking about how I completely disassociate this market and this game with reality. This is a video game where you click buttons and you earn points, and those points are dollars, and they're very valuable. But it has no bearing on reality to me. We see things get way overpriced, way underpriced. It's all perception. And in this instance, we are seeing a lot of people wake up to that fact of this market being it's a video game. It's a video game of flashing numbers in cyberspace, and our job as traders and investors is to click buttons at the right time and extract US dollars from this market to use as we please. And in my opinion, the more we move towards technical analysis and bots and algos and quant trading and all this stuff, the less and less fundamentals matter. And we look at a name like NKLA. I have no idea what NKLA's market cap is at this point, but you better believe that the big money that recognizes this situation and is running this ticker, which is up 20% after hours, after a 104% day, market cap is the last thing on their mind. There are people who have been playing this game for a decade right now that are pushing this price up with millions of dollars in position on NKLA, and they don't care in the slightest what the market cap is. And we saw the exact same thing on TLRY. They ran it up to $300. It then dropped 98% because market cap and fundamentals mean absolutely nothing. And the crypto space showed us that as well. When you are in blue sky breakout and you have bull momentum and you have FOMO and retail traders joining in on the fun, fundamentals don't exist. That's my rant. We'll check back in tomorrow. Protect your profits.
Oh, baby. Got the whole crew out. Four Cubs. Oh, get it. Yes. Multiple baby bears in multiple trees.